Picture this. Marcus is sitting in his apartment on a Wednesday night, scrolling through his phone after another exhausting day at work. He's a marketing manager making $75,000 a year. Not rich, but comfortable, solidly middle class. He sees a TikTok about calculating your real hourly wage and thinks it's going to be some dumb clickbait thing, but he's bored, so he opens his calculator app and starts doing the math. 10 minutes later, he's staring at his phone screen in complete silence. His real hourly wage is $4.17 per hour. $4.17. The barista who made his morning coffee makes more than him per actual hour worked. Marcus makes $75,000 a year, and he's earning less per real hour than someone working minimum wage in Seattle. And the worst part? He just realized he's been doing this for 7 years. He's traded 7 years of his life at $4.17 per hour while thinking he was making $36 an hour. My name is Evan, and I've been obsessed with understanding why people who think they're doing financially well are actually getting destroyed by hidden costs they never calculated. If you've ever felt like you're working harder than ever but your bank account doesn't reflect it, if you make what you consider a decent salary but still feel broke at the end of every month, if you're tired but don't know why you can't seem to get ahead, make sure you hit that subscribe button. I upload videos breaking down the financial traps that keep people stuck, and this might be the most important one, because what I'm about to show you isn't just about Marcus. This is about the lie we've all been sold about what our work is actually worth. Here's what makes this so brutal. Marcus isn't stupid. He's not financially irresponsible. He's doing exactly what everyone told him to do. He went to college, he got a corporate job, he climbed the ladder from $48,000 to $75,000 over 7 years. He drives a decent car, he lives in a nice apartment. He buys lunch at work like everyone else. On paper, he's winning. His LinkedIn says, marketing manager at a Fortune 500 company, $75,000. But nobody taught him how to calculate what that actually costs him. Let me show you the math that broke Marcus's brain, because I guarantee this applies to you too. Marcus makes $75,000 per year. If you divide that by 2,080 hours, which is the standard 40-hour work week times 52 weeks, you get $36.06 per hour. That's what Marcus tells people when they ask what he makes. About $36 an hour. It sounds respectable, it sounds like he's doing well, but that number is a lie. And here's why. First, let's talk about taxes, because Marcus doesn't actually take home $75,000. Federal income tax on $75,000 for a single person is roughly $12,000. State income tax, depending on where he lives, let's say $3,500. Social Security and Medicare taxes are $5,738. His actual take-home pay after taxes is $53,762. We just went from $75,000 to $53,762 before Marcus even saw a single dollar. That's $21,238 that disappeared before it hit his account. So his real hourly wage based on take-home is actually $25.85, not $36.06. But we're just getting started, because now we need to talk about what it costs Marcus to have that job. Marcus lives 25 miles from his office. He drives to work every day because there's no public transit that makes sense for his commute. His car payment is $400 per month. That's $4,800 per year. Gas for his commute costs about $200 per month. That's $2,400 per year. Parking at his office is $150 per month. Another $1,800 per year. Car insurance, which is higher because of his commute mileage, adds another $1,200 per year. Oil changes, tire rotations, General maintenance because he's putting 12,000 miles a year on his car just for work. That's roughly $800 per year. We're at $11,000 per year just for the privilege of getting to his job. But it doesn't stop there. Marcus works in a corporate office. He needs to look professional. He buys business casual clothes, expensive suits, just normal work clothes, pants, shirts, shoes that aren't sneakers. That's about $1,200 per year to maintain a work-appropriate wardrobe. Dry cleaning for those clothes, because you can't just throw dress shirts in the washing machine forever. That's another $600 per year. Marcus doesn't pack lunch. He's too tired in the morning and there's a food court downstairs. He spends about $12 per day on lunch. That's $60 per week, $3,120 per year. Coffee at Starbucks on the way to work because he's exhausted. And needs caffeine, $6 per day, $1,560 per year. We haven't even gotten to the invisible costs yet, and we're already at $17,480 in expenses that only exist because Marcus has this job. His real take-home is now $3,762 minus $17,480, which equals $36,282. Divided by 2,080 hours, his real hourly wage is $17.44. We went from $36 per hour to $17.44 per hour. And we're still not done, because Marcus doesn't work 40 hours per week. Nobody actually works exactly 40 hours per week. His commute is 50 minutes each way on a good day. That's an hour and 40 minutes per day, 8.3 hours per week just sitting in traffic. Getting ready for work in the morning takes 45 minutes. Shower, shave, get dressed in work clothes, pack his bag. That's 3.75 hours per week. After work, Marcus is exhausted. He doesn't go to the gym, he doesn't cook healthy meals. He orders delivery or picks up fast food because he's too tired to function. That's what I call decompression time. The time it takes him to recover from work enough to be a human being again. That's about an hour per day, 5 hours per week. Marcus thinks about work constantly. Emails at night, Slack messages on weekends. Sunday, scaries where he's dreading Monday starting at 4 p.m. on Sunday afternoon. Let's conservatively say that's 3 hours per week of mental energy consumed by work outside of work hours. Oh, and Marcus doesn't get paid for lunch. He works 9 to 5, but that includes an unpaid 1-hour lunch. So his 40-hour work week is actually 45 hours at the office. Let's add this up. 45 hours at the office, 8.3 hours commuting, 3.75 hours getting ready, 5 hours decompressing, 3 hours thinking about work. Marcus's real work week is 65 hours. 65 hours per week times 52 weeks is 3,380 hours per year. His real net income of $36,282 divided by 3,380 real hours equals $10.74 per hour. Marcus makes $75,000 per year, and his real hourly wage is $10.74. But we're still not done, because there's one more layer that nobody talks about, the convenience tax. Marcus is too exhausted to cook, so he orders delivery 3 times per week. Delivery costs about $20 more per meal than cooking at home would cost. That's $60 per week, $3,120 per year. He pays for a gym membership he doesn't use because he's too tired after work, $50 per month, $600 per year. He pays for a cleaning service to come once a month because he doesn't have the energy to deep clean his apartment, $150 per month, $1,800 per year. He subscribes to every streaming service because he's too tired to do anything but watch TV after work. Netflix, Hulu, HBO, Disney+, Amazon Prime. $80 per month, $960 per year. His work creates lifestyle expenses that wouldn't exist if he had time and energy. Total convenience tax, $6,480 per year. His actual real net income is now $36,282 minus $6,480, which equals $29,802. Divided by 3,380 real hours per year, Marcus's true hourly wage is $8.82. But wait, we're not quite done, because Marcus also loses vacation days. He gets 2 weeks of paid vacation per year. Sounds good, right? Except he never actually takes 2 full weeks off. He checks email on vacation. He takes calls. He does work while he's supposedly relaxing. Last year, he took 1 actual week off where he didn't work at all. The other week, he worked about 10 hours total responding to emergencies. So really, Marcus loses 1 week of his life to work that he's not being paid for. That's 65 hours at his real rate. And here's the final brutal part. Marcus has been doing this job for 7 years. In that time, he's gotten promoted twice and received annual raises averaging 3.8%. He started at $48,000. He's now at $75,000. That feels like massive progress, but his expenses have scaled with his income. When he made $48,000, he lived in a cheaper apartment, drove an older car, packed lunch more often. As his salary increased, so did his lifestyle. His real hourly wage when he made $48,000 was actually $11.20. 7 years later, making $75,000, his real hourly wage is $8.82. Marcus got a 56% salary increase over 7 years, and his real hourly wage went down by 21%. He's working more, earning less per real hour, and feeling more exhausted than ever. This is the trap. And Marcus isn't alone. This is the reality for millions of people who think they're doing fine because their salary looks good on LinkedIn. A 2024 study from the Economic Policy Institute found that when you account for commute time, work-related expenses and unpaid labor, the average American office worker's real hourly wage is 40% to 60% lower than their stated hourly wage. People making $70,000 to $90,000 per year have real hourly wages between $8 and $14. You're trading your life at poverty wages while convincing yourself you're middle class because your salary has a comma in it. Now here's where this gets even worse. Marcus can't just quit. He has bills. He has debt. He has a lifestyle that requires $75,000 per year to maintain. He's trapped in a job that pays him $8.82 per real hour because he's built a life that requires the $75,000 gross salary. This is what I call economic captivity. You're not working because you want to. You're working because you've locked yourself into expenses that require that specific income level. And the really insidious part, Marcus's employer knows this. Every company knows this. They know that once you've been there 3 years, once you've gotten the car and the apartment and the lifestyle, you can't leave. You're stuck. So they give you 3% raises instead of market rate increases. They pile on more work because they know you'll say yes. They make you available 24/7 because they know you'll answer. You're not an employee. You're an indentured servant who convinced yourself you're free because you get to pick your own apartment. Let me show you what Marcus should do, because there is a way out of this. First, calculate your real hourly wage right now, not later, right now. Take your annual salary, subtract all taxes. That's your take-home. List every single expense that only exists because of your job. Commute, parking, clothes, lunches out, coffee, gym membership you don't use, delivery food because you're too tired to cook, all of it. Subtract those expenses from your take-home. That's your real net income. Now calculate your real hours. How long is your commute each way? How long does it take you to get ready for work? How much time do you spend decompressing after work? How much mental energy do you spend on work outside of work hours? Add all those hours to your official work hours. Multiply by 52 weeks. That's your real annual hours. Divide your real net income by your real annual hours. That number you just calculated is what you're actually earning per hour of your life that gets consumed by work. If that number horrifies you, good, it should. Second, Marcus needs to attack this from both sides, increase real income and decrease real hours. On the income side, he has three options: negotiate a significant raise at his current job, switch to a remote job that eliminates commute costs and time, or find a job that pays more. The worst thing Marcus can do is stay at his current job collecting 3% annual raises. That's a guarantee that his real hourly wage will continue to decline. On the expense side, Marcus needs to eliminate every single cost that only exists because of work. If he can get remote work, his commute costs disappear. $11,000 per year back in his pocket. If he meal preps on Sunday, his lunch costs go from $3,120 to maybe $800, $2,320 back in his pocket. If he's not exhausted from commuting, he can cook dinner instead of ordering delivery. $3,120 back in his pocket. That's $16,440 in expenses eliminated just by going remote. On the hours side, remote work eliminates 8.3 hours per week of commuting and 3.75 hours per week of getting ready. That's 12 hours per week, 624 hours per year. If Marcus can go remote at his current $75,000 salary, his real numbers become take home $53,762, work expenses $5,580, just clothes and remaining costs, real net income $48,182, real hours 2,756, 40 hours work plus 5 decompression plus 3 mental energy equals 48 hours per week. Real hourly wage $17.49. Marcus just went from $8.82 per hour to $17.49 per hour without changing his salary at all. But here's what Marcus should actually do. He should take that real hourly wage calculation and use it to make every career decision from now on. If someone offers him a $90,000 job that requires relocating to an expensive city with a brutal commute, he needs to calculate the real hourly wage, not just look at the salary number. $90,000 sounds like a $15,000 raise, but if it comes with $30,000 more in living expenses and 20 more hours per week consumed by commute and lifestyle maintenance, and his real hourly wage could actually go down. People make terrible career decisions because they only look at gross salary. Real hourly wage tells you the truth. The goal isn't to find a job with the highest salary. The goal is to find the life structure with the highest real hourly wage. That might mean a lower paying remote job. It might mean moving to a lower cost of living area. It might mean starting a business where you control your hours. What it definitely doesn't mean is staying in a corporate job that pays you $75,000 while extracting $8.82 per hour of your actual life. Marcus is 32 years old. If he continues on this path until he's 65, he will work approximately 111,540 real hours over the next 33 years. At $8.82 per hour, he will earn $983,983 in real net income over his entire remaining career, just under $1 million for 33 years of his life. But if Marcus gets his real hourly wage up to $25 per hour by going remote, cutting expenses and being strategic about his career moves, those same 33 years would net him $2,000,000 $788,500. The difference between optimizing for gross salary versus optimizing for real hourly wage is $1.8 million over a career. Marcus spent 7 years making the wrong optimization. He chased salary increases while his real hourly wage collapsed. Most people will do the same thing for 40 years and wonder why they're exhausted and broke despite doing everything right. You can keep chasing the next promotion and the next 3% raise while your real hourly wage slowly destroys you. You can keep telling yourself you make good money because your salary sounds impressive. Or you can calculate your real hourly wage today and realize you're trading your life at poverty wages in exchange for the illusion of success. Marcus finally did the calculation. He's now looking for remote work and planning to move to a lower cost of living city. He's optimizing for real hourly wage instead of gross salary. He's going to make less money on paper and have a dramatically better life in reality. If this video made you want to calculate your real hourly wage right now, hit that like button and subscribe. I break down the hidden financial traps that keep people stuck, and I upload new videos every week showing you the math that changes everything. I'll see you in the next one.